We're going to take a look at 6 days of buy and reversal alerts this week for Blue Chip Daily Trend Report. So we're going to get started with last Sunday. And what I do every Sunday is I post a top 25 list for our subscribers going into the week. And basically what this is, 25 top ranked stocks, technically across a variety of S&P 500 sectors. So last week I posted it as a watch list status. This was last Sunday, only because the S&P 500 was below the 200-day moving average. It was pulling back. Some of these stocks had earnings pending, but we always want to have a watch list ready to go in case there are reversal signals. So we'll move to Monday morning, and I let subscribers know early in the morning that we were on the lookout for a near-term reversal. I'd expect it would need to start in the bond market and for bond yields to stay under 5%. We'd like to see an 85% upside day, indices up over 1.5%, or some type of a selling flush and reversal. So we'll move to Tuesday morning, pre-market on the 31st. And I shared with subscribers that November was historically the best month of the year for the S&P 500, second best month of the year for the NASDAQ. Now, always current charts are the best guide. We always want to dial into what's actually happening on the charts, not just seasonality, but that I do share seasonality at the extremes, and that I wanted to let members know that we were going into historically the best month of the year for the S&P 500. Later that day, after the close on Tuesday, 80% upside day. FOMC was the next day, and we were expecting no rate hike and the higher for longer message, and that's what we got. And we were focused on charts over the 50-day and over the 200-day moving average. Wednesday morning, a few hours after the Treasury Department issued their statement, we let members know that we were dialed into bond yields, that the 10-year had not closed below the 20-day moving average since September 1st. This was probably the biggest market mover over the last 3 months, and that the statement that morning from the Treasury about nearing the end of their coupon auction raises was leading bond yields down and the indices higher. Wednesday night, 6:45 p.m., we told members we believed that the highs were in for bond yields for this cycle. We increased our equity exposure on Wednesday, and we were still focused on charts over the 50 and 200-day, and quite a lot of detail to support that. So we can see Wednesday night, we added some exposure Wednesday. We can see Thursday, Friday were sharp moves higher in the S&P. Friday morning, November 2nd, we let members know breakout bond yields had been the biggest headwind. The Treasury's near the end. The Fed is near the end. Earnings are mostly well received, and there's a recovery attempt underway for the S&P and the NASDAQ 100. Thursday night, excuse my telephone, Thursday night, we let subscribers know all 11 S&P sectors closed up by over 1.3%. Almost 10% of large caps were up 5% or more for the day, and that in my experience, these types of moves occur at the beginning of a bigger trend move, not near the end. Also Thursday night, when Apple was trading down almost 3%, we told subscribers that we believed that any pullbacks would be buyable in the tech sector and triple Q, which they turned out to be. Also Thursday night, we shared with subscribers that the AAII sentiment survey, I believe that's the American Association of Individual Investors, was at extremes. Bullish sentiment at extreme lows, bearish sentiment at extreme highs, and that according to AAII, this is often a very good contrarian indicator. And then finally, yesterday, Friday morning, right after the jobs number, we let members know jobs came in below estimate, unemployment was higher, and that I expected a lower for bond yields and higher for the S&P 500. So that was right after the number Friday morning. So we can see this week, and especially when we really started to dial into bond yields, Wednesday, Thursday, Friday. So remember, we told subscribers that we thought any reversals would need to start in the bond market. 3 sharp days lower, triple Q, 3 sharp days higher, 6 overall, but 3 higher sharply, S&P 3 higher sharply, all started in the bond market. So we started to add back to equities on Wednesday. We bought stocks on Wednesday. We bought stocks on Thursday and bonds, and then we bought stocks again on Friday. So we'll go back to the top 25 list that we posted on Sunday. So we always want to give subscribers our best technical ideas, and then some subscribers will research the ideas right at the market. Some will develop a watch list. So AMD did not get added until Friday, so we can't take the full credit for that. ServiceNow was added on Wednesday at about 581. That closed at 606. But Kamiko up 10%, CrowdStrike up 8%, Amazon up 8%, Chipotle up 8%, Intel up 7%, Microsoft almost 7%, Allstate, Spotify 6%, and then down the list. And then PDD, Northrop Grumman, and Shell were lower for the week. But what we did on Sunday was we gave members a blueprint or top rank stocks to watch. And then on Monday, we spelled out the blueprint of what we were looking for. If you'd like to learn more about Blue Chip Daily and what we do, you can visit our website, bluechipdaily.com. We've got a 30-day free trial if you'd like to try us out. Also, you can go on and see some of our best technical alerts over the course of the year. You can go into each post, look at the chart that was posted in real time and how that's followed up. So I hope that you enjoyed the video. I appreciate everyone's time, and I hope to see you on our website shortly. Thank you.